Here we are in class 13, and what we want to do today is finish up the article number 2. We had that first short article that was a couple of pages, and then we have this much longer article, article 2. There is some overlap and some unique material. It's a much longer article. The article, how healthcare killed this gentleman's father because of a staph infection he picked up in the hospital. And then we'll get into a unique article, a very short article on healthcare and women, and there's a couple of reasons why I have that article in there. And then we'll get into the long collection of articles, several articles, over 100 pages, probably close to 140 pages of articles on healthcare for all different issues. So last class we ended up saying healthcare can create its own supply. I mean, its own demand. The healthcare industry can create its own demand because of this asymmetric information. Doctors know a whole lot. Patients are somewhat at the mercy of the doctors. And because of that, that sets up another issue we have under the problem of healthcare, is there's a big difference between healthcare costs and usage, one city versus another, even for the exact same elements. So you can see for Medicare, they spend twice as much in Dallas per patient than they do in Salem. Why? Because Dallas has an excess number of beds and doctors. And so when you have more beds, more hospital beds than you need, then you tell your patients, stay 2 nights instead of one night. We want to monitor you. We want to run more tests. It's not that it's evil or conniving, but simply there's a rationalization we tend to do. Do more tests make sense? Yep, maybe they could. 2 doctors might disagree on that. But when it's a debate whether more tests are needed, cities that have excess supply will order more tests. Cities that do not have excess supply, they will not order more tests. So there's obviously a link there between the supply available and what doctors order, creating demand at will. So what happens when Medicare says, you know what, we're going to control this? So we think we're paying you doctors too much for chemotherapy and anemia drugs, so we're going to cut what we pay you by 20%. And so Medicare sees those costs go down 20%, sure enough, but their total treatment costs actually rose overnight. Why was it? Well, physicians said, well, if we can't get our money on this treatment, we'll either order more of that treatment, or we'll do more of other more profitable treatments, and we'll end up making the same return on capital we were making before. Medicare will end up paying just as much as they had before, if not more. And that's what I mean in the problems. You'll notice in the problems that governments are very good at controlling prices, because that's much easier. The reimbursement rate for Medicare, that's very easy to control. But governments are not good at controlling costs. And costs are the issue here. It's not price. In fact, pricing is so non-transparent, so confusing that it's really hard to know who's charging whom for what. Hospitals just know the bottom line of what they get at the very end. They make sure they meet that, and they'll adjust however they need to do that. So a friend of mine and I, we had the great honor of seeing Milton Friedman at a conference. I've always been a big fan of Milton Friedman. I just liked the way he was very respectful to the people he disagreed with. He didn't insult people. He was very respectful. He would destroy people in debate. He was a very smart debater, very, very knowledgeable, very logical. But he was never cruel and never mean. So I always liked hearing him. I loved reading his books. I recommend reading his books. You might disagree with his economics, but he's a great writer, very, very thoughtful, will definitely get you thinking. And so my friend asked Milton Friedman at this conference, what was the upside limit on demand for healthcare? And Friedman says there is no limit. Just like the author here said, healthcare demand has no natural limit. And what Friedman called it was, and you might even work this into your paper, he said healthcare is the ultimate consumer good. If you're not healthy, if you're sick, or if you're in pain, if you're suffering, you got a broken bone of some kind, you can't go on with your life until you fix this situation. No other consumer good will be of value to you. You want that medical condition completely resolved as fast as possible, and you're willing to pay whatever it takes. The elasticity of demand, if you remember that, price elasticity of demand is very, very low. You're not that price sensitive for two reasons. First, because it is the ultimate consumer good. You need to be healthy before you can enjoy anything else in life. But secondly, because we don't pay for our health care, it's usually paid for by insurance companies, we have very little skin in the game. We're going to see some other articles that show that when you pass more of the costs on the consumers and they have more choices, price elasticity is actually there. Consumers actually will price and will make decisions on whether to have surgery or therapy, which makes more sense. When they pay more of the cost, there is price elasticity there, but it's still not as elastic as other products. People definitely are willing to pay for healthcare, even when it's out of pocket. If they're in pain, they want that fixed. But especially because insurance covers it, makes the elasticity of demand for healthcare very, very, very low, almost non-existent. And so that's what he gets to here. Someone else is paying the bill. So the cost of new benefits can be borne by someone else, and there really is no one else. It eventually comes back to us because we're paying the insurance premiums or we're paying the taxes for Medicare. Ultimately, we're paying for it. Maybe not fairly. It's possible senior citizens were going to make out like bandits with Medicare, and future generations will be stuck with that bill. So it doesn't. I'm not saying everybody will equally pay, but ultimately someone will pay for this. Taxpayers, health insurance company clients, we as patients of the healthcare system, someone will ultimately pay these bills. So is it the insurance companies making all this money? So if you take the profits of the 10 largest U.S. drug companies, if you take the health insurance industry companies, so the profits of the health insurance companies would cover 4 days of health care. The profits of the 10 biggest drug companies, there's another 7 days. You take all the profits of all U.S. companies, that would only cover 5 months. So, we're not. It's firms are profitable because they're risky businesses. We're not going to do this in this class because it's a little tough to get the data. But if you look at the profitability of health insurance companies, of pharmaceuticals, they're not radically more profitable. And health insurance companies are not that profitable. Especially, that's why so many firms have been getting out of health insurance. But also, pharmaceuticals and others that do have above average profits, it's not so extreme that it really shocks the conscience. So, firms are profitable, but they need to be profitable because they have a cost of capital to cover. Is your employer paying for all this? It's coming out of their pocket. I'm very confident that most of what your employer is paying for your health care, if it did not pay for health care, most of that would come back to you in higher wages. There's been studies on that. It's not maybe 100%, but it's not 5%. So if they save $10,000 giving you health care, they're probably going to give $9,000 to $9,500 to you in higher pay when they lose that $10,000 expense. We'll talk about that later when we look at some of the mathematics of this. So he makes this argument, and I cannot confirm this number. I don't know where he got it. He's not an economist. He's not a finance person. He's a journalist. But let's say it's some number in this ballpark. But he says over your lifetime, your employer, including your Medicare tax and your employer's match of Medicare tax over your lifetime, your family, this is a family, not an individual. So maybe it's 3 or 4 people. So maybe if you're one person, it's a fourth of this. But over the lifetime of a family, you'll spend $1.77 million on healthcare. So what he's saying is are there better places to spend that $1.77 million? You only pay about a quarter of it out of your own pocket. The rest is spent by your employer, come out of your paycheck, or comes out of Medicare. And this is one of the reasons he argues, and you're going to see this argument a lot, is we cover so much by insurance, it means that the people using the service are not price conscious, not price sensitive. That makes people overconsume healthcare. The supply side of healthcare loves that because they want as much healthcare coverage as possible. So one thing you might put in your notes, what about the insurance companies? Don't they want lower costs? And insurance over time has become much more of a cost plus business. They tend to pass all of this on to the employer and to the employee. And when you're a cost plus business, you actually like higher costs. If you get your cost plus 20%, then you'd rather spend $1 billion than $800 million. You'd rather get 20% on $1 billion than 20% on $800 million. So insurance companies, there has been a time when they were cutting costs to try to get more profitable, but they really don't have a strong incentive to cut costs. So the biggest person with an incentive to cut costs is the employer. It's your employer, it's companies, and they have been aggressively moving their employees to higher deductible policies. So they really have been the biggest mover of healthcare reform because the old managed care approach, they just saw excessive use of healthcare. We talked about that in an earlier class. You think about this when you think about solutions. So one solution you might say is have the government do more cost control. But as I mentioned, the government focuses on prices, not on costs. I really think, and I mentioned this before, when President Obama was doing the Affordable Care Act, I think he really wanted to focus on costs. But because this industry donates so much political money to politicians, I think he just threw in the towel and said, forget it. I'm just going to have to focus on the demand side. And so there's very little in the Affordable Care Act that really focuses on costs. Medicare focuses on price, and as we saw, it just means hospitals, doctors, they find other ways to charge Medicare. So even with all these price controls, the amount we're spending on Medicare just keeps growing and growing and growing. Cost control is a function not of centralized governments, but of decentralized competitive markets. It's a matter of incentives, not mandates. We'll probably bring up this concept of mandates again, because that's a big part of the Affordable Care Act, and I think it's one of its weaknesses, because it mandates things rather than letting competitive markets and letting the consumer decide what they need. And that's essentially what he is proposing here. These strange distortions that crop up in healthcare. And so we have one example he gives us. We have the aging baby boomers, and yet we have very few geriatricians. You think there'd be more of those, but why not? Well, because Medicare is cutting its reimbursement rate on things those physicians make a lot of money on. And so I've been in some doctors' offices where they're saying we no longer accept Medicare. So Medicare, essentially what it does is when they cut prices, they either find hospitals and doctors charge them more for other things, or hospitals and doctors simply stop doing that service. And then seniors then are out in the cold. If the senior citizens are the true customers, people will be flocking to the business, bidding up their rates. There'd be excess demand, not enough supply, and there'd be a signal to medical school students to get into that business. But since Medicare is the customer, and since this decides what it's going to pay, it decides where are the best places to work in medicine, where the consumer doesn't, but the bureaucrats do, and it creates incredible distortions. One of the problems you'll see is we have too many specialists in the healthcare system and not enough general practitioners. Those are somewhat of the gatekeepers. They're less expensive. They can see more patients. They don't generally recommend the most expensive stuff because they don't make money off of surgeries. But we don't have enough of them because that's not where the money is, based on how the bureaucrats decide to reimburse. Medicare tax contributions and premiums that you paid into the system don't fully fund the care. We'll talk about that. We'll talk about that later. I'm going to give you the exact numbers. He's a little more general about this, but I'll give you some shocking numbers on how little we pay in the Medicare versus what we'll get out of it. So the subsidy is even larger as it becomes more difficult to maintain because more and more people are retiring. There's more and more baby boomers. So next year there's 3.7 workers for each Medicare beneficiary. There will only be 2.4 workers in about 25 years. And other countries that are having these problems, or Japan's a good example. They're really struggling with just rising costs of pensions and healthcare systems. So, but we'll get into. I'll give you more specific numbers. They really are quite shocking. Another problem with healthcare that's on the list is that healthcare is extremely highly regulated, and that creates barriers to entry for both healthcare providers and insurance companies. Um, and what this does is you have a few powerful institutions dominate the healthcare landscape, and they obviously want to protect themselves from competition. We've seen this even with some things that firms outside of healthcare want to do, like Costco and Apple. They want to have these practitioner clinics in their stores, and the American Medical Association and others are saying, no, you need a full-fledged doctor to see that. And there's debates. Maybe there are some risks there, but there's a lot of people who believe you don't really need to have a full paid, full expense doctor seeing you. There are times where practitioners, nurse practitioners, doctor practitioners can take care of these kind of routine types of procedures at a much lower cost. But these groups have a lot of power, they have a lot of money, and they tend to get the laws changed to protect them from competition. So healthcare regulation stifles competition. Since 1975, so here's a good example of the non-competitive nature of insurance. Hospitals' revenue growth has occurred despite a 35% decline in the number of beds, no increase in admissions, and almost a 50% decline in the average length of stay. So volumes have come down, and yet their revenues are going up. What's one way they're doing it? We'll talk about this issue. High-tech equipment has been used more and more often. So fewer major procedures are done. Pharmaceutical therapies have grown in importance. Hospitals have managed to retain the same share of the nation's healthcare bill, even though they see fewer patients. Why did they get to charge so much more? We'll talk about this issue of high-tech equipment and how high-tech equipment is actually increasing. The only industry you can probably think of where more technology makes things more expensive. Every other industry, more technology makes things less expensive, but healthcare is very unique there. One issue you hear hospitals complain about is the charity care we provide. Those people who come in off the street and they don't have insurance and can't afford to pay for it. That's the reason our costs are so high. Our costs are going up for them, and they come into our emergency rooms, and you can see our emergency rooms are the most expensive part of the hospital. Well, really, that's not true. In fact, there's been some studies that show, and we'll see it in another article later, that emergency rooms are actually some of the most efficient, the cheapest part of the hospital. They're actually the most efficiently run. They see high volume of patients. Their costs are very low relative to the number of patients they see. But hospitals can allocate costs. And so what they do is they allocate a lot of overhead costs to their emergency rooms. That way they can argue that, wow, we're expensive because we're doing all this stuff for charity, when that's really not the case. So we'll get back to technology. There's a few things on technology that I want you to get into this, but technology is part of the problem, and we'll see that later here in some of the other articles. Where more tech, and maybe even some in this article, more technology is simply an excuse for hospitals and doctors to charge much more. You want to get the latest technology, whether it's been proven to work or not. But the other side of technology is technology to make hospitals and doctors more efficient. It's digitizing the body, the human body, so that you don't have redundant doctor visits. And I'll talk about some of those later. It really is amazing how much waste there is in the healthcare system because of the lack of technology and digitized records. And so hospitals and doctors don't have an incentive to automate because the patient is not the customer, it's Medicare. And one of the things I've always wondered, I've been in this 20 years ago, I was working on, maybe even more than that, I was on a program to automate healthcare. Automate the records between employers and healthcare providers to try to get the costs down. And that project was, using technology to share records. And that project, it was a major national group. I went through the meetings. They finally shut it down. And the reason he shut it down is they said, until Medicare moves, until Medicare sets what the standards are, we can't do anything. We cannot develop anything on our own. But since then, Medicare has just not moved. I've always wondered why we don't use Medicare as the bullet to get the healthcare system to automate. Now, there are plenty in healthcare that have been automating it. I have noticed it. There's a huge difference between different providers. Some of them are extremely efficient, extremely state-of-the-art, and others are extremely, 20, 30 years antiquated, behind the times. So it's a mixed bag. Um, so and another reasons, we've talked about this, bad incentives. The fact that this hospital caused this guy's father to get infected, that actually made the hospital more money. They actually had an incentive to be inefficient because then they could charge more. So when you go to the doctor, think about this. You're going in for major surgery. When do you talk about the price? You might call your insurer and ask what your copay is going to be. But most people, they have major surgery, they just say, okay, fine, whatever the bill is going to be. I have insurance, so I'll pay whatever my share is. But no one's asked, well, doctors, I need to shop rates. I may be able to get this surgery cheaper somewhere else. What if doctors and patients talked about costs more? Not just copays, but the full cost. What if your insurance company, and we'll talk about this as well, what if your insurance company gave you an incentive to go to a cheaper provider if the quality was the same, and they could show you that the quality was the same? So because prices are opaque, medical institutions, they have an incentive to keep prices up. Insurance companies do negotiate some on that, but insurance companies are losing their incentives to do that. So what about the healthcare system where it does work? Are there places where healthcare actually has become more competitive, where prices are actually falling? And yes, any place where healthcare is not covered universally by health insurance, those are the places where healthcare has become more efficient. So LASIK surgery is one example. Now, I've heard people in the military insurance is actually covering LASIK surgery for the eyes. My insurance company did not cover LASIK. I had to pay for it out of pocket. But the cost of LASIK surgery technology has been advancing dramatically, and LASIK surgery costs have been coming down. Now, they say here, quotes as low as $500. I actually did some online here in San Antonio, and it ranged from $700 to $1,000, but still much lower than it has been in the past. It's definitely coming down quite dramatically. I think mine were $3,000 or $4,000, and so now I could probably get both eyes for under $2,000, probably 50% lower than it was, and that's not even inflation adjusted. Mine were $3,000 to $4,000 in $1990. In $1990, not in today's dollars, so I'm not inflating that. So it's dropped 50%. So when you adjust it for inflation, it's dropped probably more like 70 or 80%. So technology is driving up the cost of healthcare. Why? Because there's no competitive forces. So where else do you see technology driving up costs other than in healthcare? Another part of his problem is the exact same thing we saw in the first article. It's the wasteful insurance system. Insurance distorts incentives, gives a bias toward treatment. He says moral hazard. Again, that should be morale hazard. People don't have an incentive to take as good a care of themselves because they're not paying for that out of pocket. There's hidden costs, lack of transparency. We'll talk about hidden costs more here in a few articles. Bad competition. You don't have the right customer in mind. Your customer is who pays you, who sends you the bill. Who pays the bill, who sends you the check. That's not the patient. So he talks about here's the problem with health insurance that distorts incentives, just like we saw in the first article. So more and more money just keeps pouring into the system. Now he talks about this, what President Obama and Congress are working on before the Affordable Care Act was passed, and he does not think this type of comprehensive reform, and he put the word comprehensive mainly because it's only addressing the demand side, not the cost side. He really doesn't think it's going to work. We won't talk intensely in detail about the Affordable Care Act. We will talk some about it and get a little bit of detail, but not intense detail. So most of the benefit of technology would go to the patients, not to the providers of the service. So they don't have that incentive to make our lives easier. It's a consumer-facing industry that tends to make it less competitive, except for the consumers, not the consumers. So you think about in retail or anywhere else that's consumer-facing, there's a strong incentive to invest to make the process cheaper and more efficient for the consumer. But when your customer is Medicare or the insurance company, even though you're facing with the so-called consumer, the patient, they're not the one paying the bill, so you don't have that incentive to be competitive. So there's the wrong incentives in place. I know what I did. I had one doctor, my ENT, my endocrinologist. I would sign up for an appointment at say 8 a.m. and I would get there at 7:45. I remember the last time I saw this doctor, I came in at 7:45 for an 8 a.m. appointment. At 12:30, I finally go into the doctor's office and he walks in. He starts talking to me. Everything he's saying is wrong. And I'm thinking, wait, no, I did that. And he goes, oh, and he noticed he had the wrong chart. He reaches back, grabs another chart, talks to me for less than 1 minute. Seriously, less than 1 minute. And he's about to walk out of the room and he says, oh, wait, you haven't had a blood test. You need to get a blood test. I could have gotten that blood test while I was sitting there for 4.5 hours. Instead, I had to stay an extra 45 minutes, wait in line to get my blood taken. Incredibly inefficient. And so they called me about my next appointment. I said, no, I fired you. You wasted so much of my time. I hired another doctor. He's a little bit better. I go in at 8 o'clock and see him at 8:45. It's at least a little bit better. Still not as good as you would have in a competitive environment, but that was my way of getting around it. You'll see in an article we're going to talk about a lot of patients, what they pay for is in time. And I didn't want to pay for my doctor in time, and so I fired my doctor and went to another one. So we have a little bit of control over the system, but it's not dramatic. All right, so now he gets into his solutions. I think some of his solutions make some sense. Some of them I think are pretty radical, but you can take all of them or discard all of them, whatever you want to do. But one thing he says is move away from the single model of insurance to pay for everything. We got to put the consumer back in charge, not the insurer, not the government. We need consumerism. So you'll see one of the lines I have under possible solutions is get back to consumerism. Try to get the competitive world, the competitive market working here. Routine care should be paid out of pocket. It's amazing, right? We got a far left and a far right article. The first article, far right, he said, pay your routine care out of pocket. Here's the far left saying the exact same thing. Pay for those routine things out of pocket. Major predictable expenses. Now here's where you may disagree with them, but things like end-of-life care, things like pregnancy, they should be paid for out of savings and credit, just like we do everything else when we buy a car, those major ticket items. So when you don't have those items, you save up for them. When they happen, if you haven't saved up enough, you borrow money and you pay for it over time, or if you've saved out enough, you pay for it out of savings. And then unpredictable, large, unpredictable. He says massive. Remember this word massive because you're going to be shocked by his proposal. That should be funded by insurance. So his word massive is a lot larger number than the first article. The first article was talking about $5,000 deductibles. You'll be shocked when you see his deductible that he's proposing. He also doesn't like employer-provided and government-provided insurance. So what he's proposing is a single-payer, government-provided insurance for catastrophic coverage. And you'll have to see what he means by catastrophic. And every American must be required to buy it. So I thought that was interesting. Yeah, and I won't say I completely throw that out. My economist friends would probably point out the flaws in that, but it's an interesting concept. He says typical insurance has a deductible of $2,000. He says that's too low. So here it is. He thinks the threshold should be $50,000 or more would be better. Chronic conditions like diabetes, heart disease, maybe there's something lower, but still he thinks people should be paying for a lot more healthcare out of their own pocket. Why? Because then you would shop around more. Some people say, I can't afford that. Wow, it could be $50,000, but he points out, but you buy a new car for $50,000 every 7 years. You're able to handle that. Why can't you handle healthcare? You're going to be saving all that money instead of paying, $15,000, $20,000 a year in health insurance premiums. You'll have that extra money. You'll be paying only $1,000 a year for health insurance. So you'll have $14,000, $15,000 extra a year you can put away in the savings. So that's a lot of money. You should be able to afford this. The government should create a new form of health savings account. We're going to see health savings account very similar to the first article. Use the tax code. Now, I'm actually not a huge fan of let's keep using the tax code to try to get people to do things. But if we're going to use the tax code, this makes more sense to me than what we're currently doing with healthcare, making it tax deductible to the company and tax-free to the employee. It really, really does skew that tax benefit to the wealthier and to those who work for large employers. And it really is unfair to the self-employed and those working for smaller employers. He's not only saying that everyone has to buy insurance from the government for the catastrophe, but also every American has to set aside an HSA and contribute some percentage of their income to it. All non-catastrophic cares should eventually be funded out of HSA, but account holders should be allowed to draw money for any purpose without penalty once the funds exceed a ceiling. So, he's trying to set this up as much as he can, and this is one part I agree with a lot of what he's saying here. How do we get the consumer back into this question? And you get the consumer back in if the doctor says, hey, I've got this surgery, knee surgery, and it's $15,000. Well, before the person just paid a deductible of, say, $1,000. But now if they're going to pay that entire $15,000 out of pocket, and they go and research and they discover that therapy has the exact same outcomes after 5 years as the knee surgery with much less risk of infection or something else going wrong in the surgery, they may say, you know what, I'll pay $2,000 for the therapy instead of $15,000 for the knee surgery. So you now have consumers shopping. Or maybe there's one knee surgeon that charges $10,000, one charges $15,000. The patient says, well, they're 30% cheaper and their quality standards are just as good. Their quality outcomes are just as good. I'm going to do that. So we'll talk about that. There's some information we need here. Obviously, with healthcare, if someone's trying to choose between a surgeon that charges $15,000 and a surgeon that charges $10,000, and they don't know anything about quality, they'll probably assume the $15,000 surgeon is more qualified. And there's a data problem here. We've got to get that data out on quality, and we'll talk about that as well. So major expenses, appendectomy, sports injury, that might exceed a current balance in someone's HSA. What do? They fund with credit, borrow money. Catastrophic coverage should apply with no deductible for young people, but as you age and save, there'll be some kind of deductible. So he's got it thought out. Now, one thing I'm not requiring you to do in your solutions is one that you actually think you could get through Congress. However, I do want you to think about probably the biggest problem that Congress and the government has when they do things, and that is unintended consequences. So do think about unintended consequences. How will this change behavior in a way that could actually be catastrophic, could actually make things much, much, much worse? And so do think about those things. As you think about your solution, try to think about how will this change people's behavior. You're talking about something for 300 and something million people throughout the U.S. with all different problems. Some people never use healthcare, never use the healthcare system. Some people have chronic conditions and are using healthcare all the time. Try to think about those two extremes and what your proposal would actually mean. So here he says, how can I afford that? And again, it gets back to you're already paying a lot. So if we change his system, he's saying you're going to get all that money back. You won't be paying all that money in the Medicare. You won't be paying all that money for health insurance. You're going to have $10,000, $15,000, $20,000 of money that you did not have before. When you're young, you probably won't use healthcare much at all, so you can sock a lot of money away. So when you turn 40 years old, you might have $150,000, $200,000 sitting there. Uh, so that's part of the problem, is you have the money, but you don't see it because it's going through premiums or the Medicare taxes. But if you had access to that money, would you spend it in a different way? You might actually think a healthcare membership would be more valuable than spending $15,000 on health insurance. So why don't you pay $1,000 for health insurance, put $5,000 away a year in your HSA or $10,000 in your HSA, and then spend a couple $1,000s on the healthcare membership or gym membership? Maybe you'd be better off doing that. Or eating healthier. Maybe spend a little bit more money on better buying healthier, fresher food. There's so many different ways you can work this out. What we got to think about for this as a solution for the entire United States is, what do you propose so that it works as a system for everyone? There aren't people who can find a loophole in the system and take advantage of it. He talks about, just like in the first article, the government steps in for the poor, provide them some kind of funding. Now the last one, this is where I disagree with him. I disagree with President Obama on this. You're going to see some articles on why I disagree with this. But he says, well, this is the pay me now or pay me later argument. So if people have to pay out of pocket, they won't get their regular checkup. And that means someone may have cancer, it won't get caught. And so instead of paying $5,000 now for cancer treatment, they'll end up spending $100,000 later. So he's saying free checkups every 2 years. President Obama made the exact same argument. I really don't like that. First of all, this word free doesn't make sense, because the only way it's free is if the doctors volunteer their time. So what he means is it will be paid for by your taxes. So rather than you paying for it, the government pays for it. We'll talk about this. The problem with that is two things. First of all, especially for young people, the checkups doctors do for young people don't find anything. It is true there are some young people with unusual rare cancers and heart ailments, but it's extremely rare the kind of checkups they do for young people to find those type of very rare ailments. I know you've heard of NBA stars dropping dead because of a heart problem, a special heart condition. They went through, other NBA players, they had physical exams, but it was a very rare thing and it wasn't caught. So they're not going to catch that first. So for young people, all those checkups are unlikely to find that rare disease. For older people, the problem is, we're going to find the second problem is the healthcare system finds too many things. We're going to talk about prostate cancer and breast cancer, and how the healthcare system, because people go in so frequently, it actually finds a lot of things that would do no harm to the patient. They'd be better off doing nothing, and instead they get treated and they actually end up in worse physical condition because of that. So that's the problem with going in and seeing a doctor more often. You go out and see a doctor more often. When you're young, you're somewhat wasting your time and money because they won't find anything. When you're older, they'll actually find stuff that they have an incentive to find because they make more money treating you, and they'll be trading you for stuff which we call false positives. We'll see a lot about that. That's a big part of the issue here. Another big problem we're seeing with healthcare is the lack of transparency of the billing. So this is why his mom ultimately got billed for the dad. So remember, his dad went to the hospital. They treated him, and then they ended up getting him a disease, a staph infection that ended up killing him, and they charged his mother. They charged the system $637,000 to kill his father. So where are these costs coming from? It's absurd. Her part of the bill is only $992. So who paid the rest? Medicare, maybe Medicare paid that. Maybe they paid a portion of that. Insurance companies, we'll talk about this. We're going to talk about something that's really quite shocking, which are these surprise bills that come from doctors and hospitals. You assume your hospital is going to pay for it, but then they had one specialist come in that's not part of the network, and his or her bill is not part of the insurance bill, and you got to end up paying $15,000, $20,000 for a doctor to saw you for 5 minutes. So we're going to talk about other issues here, but probably Medicare paid for almost all of that, and she only paid less than $1,000 for it. Isn't it great Medicare paid for that? But she didn't care about this bill. She didn't scrutinize it. She probably didn't understand it at all. We'll talk about some of the crazy things that go in these bills. You'll be pretty shocked. It is pretty amazing. But someone's paying for that, right? If Medicare is paying $636,000 of that, Medicare doesn't make money. They don't have, they're not out working and earning a living. So it's a taxpayer who's paying for this. So we're paying for this, but the person who's getting the benefit, they don't care. And she didn't get the benefit. Her husband obviously died. But the person who's getting the benefit, the patient, they're only paying a small fraction of it. So incentives are bad. So if each family actually got all this money that we're paying for healthcare, rather than paying for it indirectly, would we make different decisions? So the Affordable Care Act wants more administrative treats with government funding. And yes, it has expanded government's role in healthcare. It has gotten more people covered. That's the good part. We'll talk about that. The uninsured American there's fewer of them, no question. But still, someone else is paying for the bill, so the consumer doesn't have skin in the game. So we are also like to get worse care in any system where providers are more accountable to insurance companies and the government than they are to the patient. So we'll talk about Michael Porter at the very end and his outcome-based medicine and his solution, patient-based, patient-focused, centered. Very much like what we talked about in the first article with human capital and that utility function. Actually setting around healthcare with the utility function of what increases the satisfaction of the customer in total. And that includes other things than just treatment. So we'll get into that when we see Michael Porter. So what if the hospital had to present the bill for his care, not to the government bureaucracy, but to the mother, the one who lost her husband? Do you really believe the hospital, forced to face the victim, forced to collect from that customer, would have figured out a way to make the doctors wash their hands? And we'll talk about that more as well. So that's a long article, a lot of stuff in there. I like this article as an introduction because he covers so many things. So what we'll do in the later articles, we'll get more specific, and I'll give you much more data and much more specific thing, but it'll be much shorter articles, go much more quickly. So we'll go much faster after this. And that starts off with this first article, very short article. It was in a San Antonio paper. And this moved to higher deductibles. So he talked about a $50,000 deductible in the previous article, the first article, a $5,000 deductible. So there's a couple things here, and I have this under solutions. So you might be asking, why does the fact that women pay more for healthcare, why do you have that under solutions versus under the problem? And the reason I did that is I want you thinking in terms of this unintended consequences. So this is one example of an unintended consequences. If we move to high deductible policies, women pay more over their lifetime for healthcare than men do. And so if we move to a higher deductible, women will be paying more out of their health savings account than men. Now, I don't know how much more it is, how you address this. You need to at least address it in your paper. Some people address it, say that's not fair. We got to find a way that that's not the case. And so, I've even proposed if you want to fix this unequitable situation, then maybe we fix it with the tax code and you have some kind of healthcare tax credit where it's higher for women than it is for men. So married couples wouldn't notice any difference at all because they'd be getting the lower one for men and a higher one for women. But single women would get the benefit. Single men would actually be subsidizing that more, but they'd see it lower. So you could talk about that. Another issue you have, and a lot of students bring this up, but it's true women pay more for health insurance, but they pay less for auto insurance. So maybe it all just balances out in the end, or maybe it doesn't. Maybe men pay an extra $1,000 a year for auto insurance, but women pay an extra $1,500 a year for health care. So how do we work that out? So I would say, well, maybe one solution is you get a bunch of economists together, you put them on a panel that's appointed by Congress. They decide the net difference in costs of being a man and being a woman, and they throw that in as a credit, a gender tax credit. And I don't know. I don't like any of those solutions. I think there's probably major flaws with any of them. I don't think there's any perfect solution to that, but I want you thinking in terms of unintended consequences. So for women, it's about $1,000 a year, they say here, but this is an old article. But anyway, just think through that. All right, so now we're getting into the large collection of articles. So let's think about this before you get started. When I do this, I'm going to have listed the rubric for the paper. And I'm going to link these articles up with arrows to where I think it could fit in the paper. You don't have to go with my organization. You can use your own. But the reason I'm doing that is not so much for me to organize the paper, but more for me to remind you, as we go, start collecting this data and getting it into your rubric, into your organization, your outline of the paper. You've got to do that while you're listening to this class. So it's really, really key that you're actually writing your paper. This is a really tough paper, a really long paper. But since our videos for these classes are going about an hour, so you've got a couple hours a week while you're watching the videos for the class, you're getting 2 hours or so of work on your paper done, which is great. Probably be more than that, because in some places you might have to put the video on pause so you can copy and paste and put that particular quote into your outline. Now what you want to do as you copy and paste these, you obviously have to write your own paper. So if I were to copy and paste this, I would copy and paste it, and I'd probably type the words page 2 so I could find it. And then when you put it into your paper, you can either rephrase it into your own words and make sure you change up the words a lot. Or if there's a lot of data in it, like here, you can say according, and I'll let you get away with it and the paper not using a perfect bibliography. So you can say, according to page 2 from our collection of articles on healthcare. Or if you want to, in parentheses, just put page 2 in the beginning of your paper. You can say, anytime I use page 2 or page 10, it's coming from this document. And that'll save you having to have to write out a long bibliography. So I'm open with a lot of things that I know a library would not be too happy about. I try to put the dates in the articles. Sometimes I forget to put the year. I try to put the dates. You don't need to do that, but that is key on some of these. Some of these articles are a little bit dated, although I haven't found any that are so dated that the point isn't still true today. All right, so as you go, be collecting these, and then when you do your paper, you can either reword it into your own words or you can actually quote it. So if it's very specific information, you might quote it. If it's not, if a general thought, you can reword it into your own words. I don't mind if you put it in your own words, something that you've seen 2 or 3 times. You just want to put 5 or 6 quotes that you've seen from articles and put it in your own words. You don't have to reference where you got that idea from at all. You can just state it. Based on what we read for this class, blah, 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 without specifically saying where you got it, all right? So get organized. You might pause right now. Make sure you have this collection of articles loaded and that you're ready to go to copy and paste. You have your rubric. That's what I was telling you in an earlier class. Have this rubric ready to go. Maybe copy and paste it into a Word document so you can bullet these comments as we go, all right? So if you need to hit pause, get organized. But we'll do a few of these articles, get started, so you can somewhat see how we're going to do this process. So the first article is about the Affordable Care Act. I don't like calling it Obamacare because it really was Congress mainly, and President Obama, although he was very heavily involved in it throughout, he was a very hands-on president on the Affordable Care Act. So it definitely is a big legacy of his administration, but a lot of people were involved with it, a lot of compromise. So I like to call it Affordable Care Act because it was Congress, plus also there's a lot of things Obama wanted that did not get into the law itself. But you can see this article is saying there's a problem with the Affordable Care Act because it says how to fix it and that the system's still dysfunctional. And so they give some good introductory things. Remember on the introduction, you want to talk about the size of this problem. So here they say America devotes 17% of GDP to healthcare. I'll give you a few other charts later that support this, versus 9%. Britain is about half the U.S. And yet 50 million Americans were uninsured in 2012. That's come down dramatically because of the Affordable Care Act, but it's still a high number. There's still a lot of Americans. And our life expectancy is really not all that great for a rich country. There could be a lot of reasons for that we'll talk about. What is the problem here? And they agree with my point is I think the biggest problem in the U.S. is the tax treatment of healthcare. Employer-sponsored coverage is tax exempt, costs the government about $200 billion a year. It fuels overuse of healthcare, so fuels inflation of healthcare, favors the rich over the poor, especially executives working for large corporations. They would be paying higher taxes if they weren't getting this tax break. So obviously, if you're getting this healthcare for free, the higher your marginal tax rate, the bigger the benefit is. So the more pay someone gets, if they're in the 35-40% tax bracket, then they're getting a much bigger benefit than someone that's in a 10% tax bracket. And there's a lot of Americans who don't pay income tax at all, so they're really not getting any tax subsidy off of this. Roughly half the population finds that their health insurance is tied to a job, makes it hard for them to switch jobs. Now, the Affordable Care Act, I will say, we talked a little bit earlier about this, seems to have part of its incentive to maybe shift more and more people away from employer-provided health care to those who get the health care directly from healthcare.gov. But healthcare inflation is one of the main reasons why the average American has seen their pace stagnate. Employers' compensation, they're actually providing more compensation, but more and more of that compensation is for health care without giving the employee more actual health care. They're simply paying more for the same health care, and they're counting that as higher compensation, but the take-home pay of the employer is actually lower. The system's designed to encourage waste. One of the things I talk about is the fraud and waste in the system. Doctors are often paid for every test or invasive treatment. Focus on treatment versus prevention. Patients don't know what anything costs. Complexity of the system, lack of price transparency. There's a lot of things in this paragraph. And the bill will only in any case be settled by somebody else, so they don't haggle. Back up here about the insurable event and what should be covered. Prices can be sky high and vary widely. Inconsistent costs and quality between cities. A mammogram in New York may be less than $100 to more than $1,700. This one page covered maybe probably 6 or 7 things on the list. I don't know if I hit them all, but yeah, I mean, there's a bunch of them in there. You can see most articles focus on one main thing. You can see this arrow looks like it's between the two of them, but this arrow is between the two of them. Healthcare is tied to employment, and it has incredible tax treatment. I even talked about the insurable event, that it covers everything. That somewhat covers this second thing. So this one article talking about Obamacare essentially is saying all these problems that Professor Sweet listed, none of these problems got fixed by the Affordable Care Act. Continue with that article on page 3. A share of uninsured has fallen from 18% to 13%. I don't know what the current number is. You could probably Google that and find it today. This is probably due mostly the expansion of Medicaid. There are more states like Kentucky here recently that are opening up this expansion of Medicaid. A lot of red states decided not to do that, not so much because of what it did for their people living in their states, but more just to show their lack of support for the Affordable Care Act. But yeah, the uninsured Americans is an issue. Now, one thing, I think we have an article. I think I put the article in here, but if not, I'll just to say, studies have shown that a lot of uninsured Americans are uninsured not because they can't afford health insurance. They could afford it. It doesn't mean that they're wealthy and can spend anything they want, but they could afford it. It is possible they could afford it and still meet all the needs of their life. But a lot of them just simply choose not to be insured. They're young, they're healthy. And remember, I think an extremely important point, why does the Affordable Care Act want young people to buy insurance? It's because they know health insurance is grossly overcharging them for the coverage to help subsidize the coverage for older Americans. And that should not be the case. That is not the case for auto insurance. Younger people pay a lot more for auto insurance. They don't subsidize anyone. They pay for their own insurance. But for some reason with health insurance, the government actually brags about the fact they're forcing young people to buy health insurance so that they can subsidize the health care of older people. You young people should be upset about that, especially that the government thinks that's a thing to brag about and to tout as far as their solution. Congress should move towards scrapping both the tax breaks for health provided and a requirement that firms offer it. So they're essentially saying Let's untie health insurance to the employer. Let's move away from tax deductions. We're going to talk about tax credits. They don't say that here, but that's part of the solution. Tax credits or HSAs, those savings could be helped to cover the subsidies for the poor. Without the tax distortions, employers would pay higher wages. This gets back to that second article we're looking at, that 1.77 million. Yeah, you might lose your health insurance, but you'd pick up, $10, $15, $20,000 that you could use for other things. Part of it you might put toward health insurance, but a big chunk of it you might do other things. Continuing to page 3, employers are already making employees pay more for their own costs. Employers who pay the first $1,000 of the bill out of pocket is far more likely to shop around than one who doesn't have to pay for it. So this is the consumerism we want to bring into it. Patients see the full costs. They start talking costs. This is so incredible that patients go in for a major expenditure and never talk about how much this is going to cost. In no other area, buying a house, buying a car, buying a stereo, no other area do we go in and say, hey, I want a new car. I don't really care about how much it's going to cost. Maybe if you're Bill Gates, that would be the case. Most Americans like, wow, that car is $20,000 more. No, I'm probably going to have to settle for a slightly less nice car. So you want more coming out of consumers' pockets. That way they actually see the cost of what the system is costing them, and you unlock this consumerism. They become more like consumers. The government should release more data on price and quality. We're going to talk more about that. Big frustration is there's been study after study that compares the quality between hospitals and doctors, and there's a huge difference. There are some surgeons that are a lot better than other surgeons. We have the data, but hospitals and doctors fight, so they do not have to release that data. But in the few tests where they release that data, quality has gone up enormously, very rapidly, right after they have to release that data. The Affordable Care Act will not fully understood for years. I don't think we're still yet there. It will never be the core of the problem. If America wants to stick to the idea that it has a healthcare market, then it should focus on trying to make it more like a market with prices, competitors, and some form of choice. You're seeing in the 3 articles we've done, not counting that third article about healthcare and women, but the 3 articles we've seen, very similar solutions, very similar type of issues. So untying healthcare to the employer, again, is one of the solutions you'll see over and over again in here. All right, so I hope you're getting used to how this is going to work. I'll have to make this PowerPoint available to you so you can see the linkages here. I don't know how I'll do it. We'll see. Make sure you're taking good notes as we go. I'll go about an hour with this because it's probably going to take you 75 minutes with all the stopping you'll have to do to go back and organize this. So I do want you doing that. I also think as you go, you should put the video on pause and actually type questions, either questions for me or questions that you want to go out and Google and find an answer to. So what's the percentage of uninsured Americans today in 2020? We saw the numbers back in 2013, 2014. What are the numbers today? Have they gotten appreciably better? Or did Affordable Care get to a kind of a 12% normal limit and just couldn't get any better? We know President Trump wanted to do away with a mandate, the penalty for not getting health insurance. Has that had an impact on the uninsured problem? What we're going to do next, this next article is an interesting one. In fact, let me do this article really, really quickly because it's not a big one. The only reason I have the British system in here, and this is the British system, the NHS, the National Health System, is I want to point out that while the U.S. has some very special problems, its healthcare system is much more expensive than the others. A lot of the problems listed for our paper are being faced by every country for their healthcare, not just the U.S. So it's not like healthcare is working wonderfully outside of the U.S. and the U.S. is unique. Healthcare is a major, serious problem in every country. It's just a different problem in the U.S. It's more serious in the U.S. So Britain's its problems are becoming hard to ignore. They're having to cut back, and the NHS is definitely having some funding issues. Many hospitals are struggling. Wards are often failing to see 90% of their patients within 4 hours, so long wait times. Um, so not much on that article, so I just want to cover that real quickly. I just want to make sure you're aware that all the problems they're listing are not 100% U.S. problems. Probably 70–80% of them, maybe even more than that, are problems faced around the world. It's just the U.S., with all of its problems, spends a lot more. And that's the big key issue with the U.S. We just spend a lot more than others. And there's a few reasons for that. The tax system, how our pharmaceutical system set up. We'll talk about some of those issues. All right, so I'll stop it there. Hopefully you're organized and you'll be ready to go full blast. And we'll go a little quicker in the next couple of sessions because I'll be making quick points throughout the rubric so you can collect them as you go.